Hey everyone, my name is Vincent Nguyen. Welcome to Tip Line. Keep in mind this is not financial advice, nor am I a financial advisor, so this is educational purposes only and entertainment. All right, so with that, I want to look at VIRI, take a deep dive into what VIRI has to offer next now that the entire cycle has gone through the pump, the dump, the pump, the dump, the pump, the big dump from 5 to A, the retracement, and now the new cycle begins. Actually started on Friday, but now we're going to take a deep look into what to expect next week on this move from 0 to 1. All right. Let's see here. All right. Okay, so to get started, I always like to look at very at a big picture because there was so much that was happening with the stock. There was this giant bullish, I'm sorry, bearish pattern that spanned from January 21st, 2022, all the way through July 21st of 22. Okay. And then after that, there was this extremely bullish pattern that existed pretty much from June 29th of 22 through September 27th of 22, and it just plummeted. So this bullish pattern nailed price target 1, price target 2, should have reversed, but no, came all the way down here to the XA level at 64 cents. That was a huge buying opportunity right here. And it consolidated from this point all the way through this white line, which was January 12th of 23. So it consolidated for about 79 trading days or 114 calendar days. Okay. And then that was the beginning of leg. Fast forward, that was the beginning of leg 0 to 1. So that leg 0 to 1 started on December 28th, ended on this peak, this run up 45 bars later, 45 trading days later on March 6th of 23. Okay, so that's a roughly 45 days of trading. And then from there, after that pump, there was a drive down. And then from wave 2 to 3 was a massive, giant run up. And that was a 676% run in 60 trading days. So that's about 2 months. Okay, 2 months of trading. And look how, I mean, if you had bought in at 27 cents and sold at the height of wave 3, that was $2.11. And then what happened after that? Price retraced all the way down to wave 3 to 4, and then 4 to 5. 5 down to A was I mean, it was a bear's dream right here, tapping on the 200 period moving average. And that was a 6-7% drop. Okay, so, and then you have wave, retracement wave A down to C, up to B, down to C. So, why am I sharing this with you? I'm sharing this with you so that you know when I'm going to be a bull and when I'm going to be a bear. Okay. Usually, what that means is right now, at the beginning of 0 to 1, same here, 0 to 1, I will be a bull. All right. The stock is going to go up. So I'm going to buy in low and sell high on the swing. So this is what I would consider as a swing trade. Right. So from leg 0 up to 1, I will be a bull. And then from leg 1 down to 2, I will be a bear. And then we keep doing that until we hit leg the top of leg three, like this up here. So we had the opportunity to watch and trade intimately with Viri over the last, I want to say, almost the last year. And that's the one thing I always, actually, that was the one thing I learned very early on, that you trade the stocks that you intimately know and understand, like the back of your hand. Okay. I mean, I know the back of my hand pretty well, all the lines, all the calluses, scars, whatever. Trading the market is very similar. You don't jump into a stock that someone's pumping blindly and take a trade, right? You just don't. You need to understand what you're trading before you make the trade, because that would be like gambling. And so after going through this whole entire cycle with Viri, I know it pretty intimately. I call this drop below a dollar. I called the mid 70s, low 70 cent price range when it was up here in $2. Those of you who have followed me on Twitter and on YouTube know that I made this call, and I was called crazy for doing so. Grifter, shield, whatever. I don't mind as long as I'm right. Not always right. Um, I don't mind being called whatever as long as I'm making money and as long as I know the opportunity. And right now, in present day, there is a very, very big opportunity coming in. So with this candlestick pattern, I know that there's an opportunity for a breakout coming up. And that's where the pump for Viri will start. I'm just getting ahead of the game right now, and I'm giving you a heads up that the pump cycle should start soon, and that we will see Viri start moving upwards. Okay, so immediately off the bat, once Viri breaks the 79 cents, which is right where it's at right now on Friday, it will, what I anticipate doing is, so you've had this leg up to B, down to C, moved up to here, possibly test the 79 cent range, come back down, and then make a run for 89 to 90 cents. Okay, that is going to be the first resistance level because that's the 20 SMA. So I'll draw this line here. 20 SMA is the first price target at about 90 cents. Okay, so we'll leave that there. First price target at about 90 cents. Actually, you know what? Let's do this. Let's move it to the right. Price target. Okay. All right. So we've got this price target here. First price target. If that does well and it doesn't need much retesting, it'll just move directly to the 200-day moving average, which is right here. Price target 2 at about 93 cents. I anticipate I anticipate this to move pretty quickly up through here at the 200. 200 is going to act as a resistance, so I will mark that as red. Okay, so we're going to expect some sort of resistance here. Come back down and test it, and then make its way towards the 50. Okay, so the 50 is the next level, and once that gets retested, we're going to see the first real price target, and I believe this is where leg 0 to 1 is going to conclude. So this will be 0 to 1. Okay, so leg 0 to 1 right up here. Right here's leg 0 to 1. Okay, why? Because that's going to be the breakout point for this falling wedge. Okay, so we'll change this to green because Yep, we'll change this to green because that is the breakout point. Okay, so basically you measure the neck, you measure the height from the bottom to the top of the falling wedge, and that is your price target. And that happens to be right here at $1.26. So this is going to be my ultimate price target if I don't continue to scale in on the way up. Okay, I'll probably continue to scale in on the way up to my price target one at $1.26. Now, depending on where you entered along this range, so before I do that, look at the double bottom here. Okay, double bottom, right at a low of 75 cents, right here, double bottom, 75 cents. So if you bought in between 75 and the neckline at 80 cents, let's just split the difference here. You bought in at 77 cents and you held and swung. That is a 76, I'm sorry, 63%. That would be a 63% gain on leg 0 to 1. Okay, so let me do this. Roughly 63% gain. Okay, all right, so now that I'm talking about pricing and target and things like that, just keep in mind that this is not financial advice. This is my interpretation of the charts. Okay, all right, so, and then what would I expect next? I would expect some sort of a retracement. I want to say from the neckline, we want to project this down to about, historically, it's been dropping. Let me see here. Let me see where was the leg one drop from over here. So leg one was back here historically. Leg one came down to about, wow, that's a steep retracement. That was a 786 retracement. Okay. So if we were to expand that over here and expect this to be a 786 retracement, we would see price come down so close to our second price target at 89 cents. So then look at this. Look how this TA plays out. Okay, so this would be where we would expect this to retrace down to leg two. So leg 1 to 2 retracement right here. Okay, and then from there, obviously you got leg 0 to 1, 1 to 2, and then 2 to 3. Okay, so leg 0 to 1, 1 to 2 retracement. So this is where I will look at my price target of re-entry. I will probably at this point here scale out, get out, and then look for an entry back down here at 89 cents. Okay, and then from there, after that, start another position from here and expect at least retesting the top of this falling wedge and even perhaps crossing up here to close the gap at, let's see, $1.81 is where I want to look at my next price target to be conservative. Okay, so I'm going to make that green. It's my next price target. Make this green because that's my next run up. All right, so my next price target after retracing from 89 cent, I want to look at going up to $1.81 for leg 3. That's just being extremely, extremely, extremely conservative. So this is leg 2 to 3, 2, bullish 2 to 3, bullish leg 2 to 3, and then bearish retracement of leg 1 to 2 into 2. Okay, so this is basically my game plan for the first 3 legs of VIRI. That is the game plan. So the first swing, I'm anticipating at least a 60% gain, get out, anticipating a at least a 28% drop, and then set up my position down here and wait for the next swing up. Conservatively looking at about 100% gain to leg from leg 2 to 3. That's being extremely conservative, and then expect a drop to leg 4. But for now, I want to stop here because I need to see what happens come Monday and Tuesday. And then that way we can determine the more detailed course of action for VIRI. All right, guys. So that is a brief detail. Well, brief and detail don't go hand in hand, but that's an overview of my perspective or projection of what I anticipate VIRI to play out over the upcoming months. Call it now before the pump starts. And I'm going to call it now before people start calling me a shill when it's up on leg 1, getting ready to retrace down to leg 2. Okay, so just keep that in mind. I'm going to refer back to this video months down the road when VIRI is on its way, and then that way you guys have a record of my projection before it all happens down the road. All right, guys, Vincent Wynn here for Tip Line. Make sure you understand that this is not financial advice, nor am I a financial advisor. Talk to you soon.